For the longest time, the biggest hurdles to buying a home were the usual suspects, right? The down payment, getting that mortgage approved. But what if the real deal breaker wasn't the bank at all, but the insurance company? There's this new, almost invisible barrier popping up, and it's completely tied to our changing climate.
I mean, just think about that question for a second. It's kind of terrifying, isn't it? You do everything right, you find the perfect house, you make an offer, you get the loan approved, and then, at the very last minute, you find out no one will insure it. And if you can't get insurance, you can't get a mortgage. Just like that, the deal is dead.
And this isn't some hypothetical, far-off fear anymore. This is really happening. As insurance companies start to reevaluate what's risky in a world with more extreme weather, this has become a very real, deal-breaking problem in some of the hottest real estate markets in the country.
Okay, let's put some hard numbers on this. Down in California, the state's Association of Realtors just put out a report with a pretty shocking statistic. 1 out of every 6 agents said they had a deal completely fall through for one reason and one reason only: the buyer just could not get property insurance. But here's the really wild part. That 1 in 6 number, it's double what it was just 2 years ago. So this isn't some slow-moving issue. It's a trend that's accelerating, and fast. It's all because insurers are getting spooked and pulling back from areas they now see as too risky, which, as you can imagine, is throwing a massive wrench into the housing market.
So whenever a problem grows that fast, it tends to create a vacuum. And the market, well, it usually responds with some new kind of solution. And that's exactly where this new software platform called DealShield enters the picture. So what is it exactly? Well, think of DealShield as a kind of early warning system for real estate agents. It's a tool that lets them look up a specific property and instantly get a read on its insurability, before a deal gets too far down the line and everyone's wasted their time. And the whole point, according to Michael Cheen, he's the CEO of Rhino, the company that built DealShield, is to arm agents with the data they need to have those tough, honest conversations with their clients right up front. The goal is no more 11th-hour surprises that kill the deal. All right, so how does this thing actually work? Let's pop the hood and see how this platform is supposed to turn all that uncertainty into information you can actually use. So, the heart of the whole DealShield platform is something they call the Insurability Report. It's basically a deep dive analysis of a single property, and it's looking for anything and everything that an insurance company might see and flag as a potential risk. And we're not talking about just a quick zip code search here. This platform digs into everything. Of course, it looks at the obvious stuff like location and hazard maps, but it also gets into the really granular details buried in disclosure pockets, inspection reports, and even the listing photos, looking for things like how old the roof is or if there are risky construction materials. For the agent, the process is designed to be super simple. They just log in, type in a property address, and almost instantly they get this comprehensive report and even actual insurance quotes that they can share with their client. It's all about taking a process that was really complex and frustrating and making it simple and transparent. Okay, so what does this all mean for the agents and buyers who are actually on the ground trying to navigate what's already a crazy competitive market? Well, in short, it's a huge advantage. One agent in California, Heather Gowdy, she calls the old way of doing things a tedious process. And you can see why. It meant endless phone calls, waiting days for callbacks, and just a whole lot of stressful uncertainty for her clients. And that contrast right there is everything. The old way was slow, it was murky, and it all happened way too late in the game. This new approach is all about getting fast, clear answers within minutes, right from the very beginning. And just think about what that means in a practical sense. A buyer can now go in and make an offer with total confidence because they already know their potential insurance costs and what their options are. It lets them move faster and, frankly, make a much stronger, more informed offer than the next person. So here's the bottom line. Does it actually work? Well, according to the early tests, the answer is a pretty resounding yes. The platform helped 2/3 of homeowners in these high-risk areas find insurance options that they probably wouldn't have found on their own. So, what's next on the horizon? Because this problem is definitely not unique to California, and, well, DealShield's ambitions aren't either. So, while the platform is launching first in California, the plan is to expand pretty quickly to other states that are facing similar climate-related insurance headaches. Think places like Florida, Louisiana, Texas. They want to get there by the end of 2026. They're really trying to position this as a national solution to what's become a national problem. And they're not stopping at just wildfires.
The company is already setting its sights on other major climate risks that are making life a nightmare for homeowners all across the country. We're talking everything from flooding on the coasts to all that hail and wind damage you see in the heartland.
All of this leaves us with a much bigger question. A tool like DealShield is a really fascinating way to adapt to this new reality in the housing market. But as our climate keeps changing, you have to wonder, what other fundamental parts of our economy and our lives are going to need their own version of a DealShield just to keep functioning?